All right, what is going on, Discord and YouTube family? And welcome back to another edition of Market Review with me, T Hobbs. Today is 31 May, uh, 2025, year of our Lord. Sorry, I'm typing something in the background here. All right, that's done. All right, and today we'll be breaking down the S&P 500 only because it's the only thing I traded and made a plan for. But I do wanted to address a couple things like before I make the video, which is this has been a pretty trying week for me. Essentially, things that I'm working on this weekend is just, you know, not just trusting the plan, but like doing nothing but my plan, right? Because over and over and over again, right? I know it sounds like a broken record, but this is the journey, right? Over and over and over again, I find myself looking back at my trades and saying, man, like this was a good trade, but did you follow your plan though? Right. And for me, my plan is my edge, right? So if I'm taking the time to get up and make this plan, I need to be following that plan. So that's a rant for a different day, but let's go right into the pre-market plan for the day. Pre-market plan, this is the most important part, the gray box here. This is kind of how I'm viewing the market as we start. The current conditions, we were in the markup phase. Again, we were having a bearish retracement of a bullish trend, but still in the markup phase nonetheless. This low did its job. It got above this high. Therefore, now it was time for this low to defend on a Friday. This was Sunday's low. Created a nice little fair value gap in between here. I thought we would come all the way down and tap the 43s. We didn't do that. We tapped inside of the fair value gap that sits about right here. You can see that was pretty nice. But anyway, we were bullish as long as we stayed above 58.74. And you can see as soon as we tapped into 58.74, we immediately found buyers at that level. We were bearish as long as we stayed below 6,008. So although we're in a bullish trend from here to here, well, from here to here is a bearish range, right? So this is the range, the dealing range. This dealing range is bearish as long as we stay below 6,008, right? So we have spent the last 3 days inside Tuesday's candle and have not broken its lows. This is bullish, and all higher time frames show more upside is imminent, i.e. the daily. The daily was consolidating, but the daily is a part of the weekly candle, which was very much bullish. I didn't really expect the weekly candle to flip bearish on a Friday, right? And then the monthly candle, which was important because it was the last day of the month or trading day of the month, that candle was also bullish. So all of these candles finishing bullish on a Friday, although, yeah, we got big news and everybody's talking about tariffs and all that, but the structure is the structure. The structure is just not going to flip out of nowhere. It's going to give signs that it's about to flip, right? So as long as we remained above the previous day low, which although we got below it, we did not close below the previous day low, right? So we got down here, we immediately bought it up. That's bullish, that's not bearish, right? I want to continue to look for longs. However, we have key news event today. So closure below the weekly fib, and I will look for shorts. You can see we got below the weekly fib. We did not close, right? We immediately bought it back up, and we bought it back up at a very important level that I didn't have marked on my chart pre-market, but I definitely mentioned it in the pre-market prep, which is we had a fair value gap right here between Friday the 23rd and Sunday the 25th at 10 p.m. So this fair value gap ended up being the level that price came back to, right? So essentially we put in a higher low and we went higher. Now, in regards to the chessboard high and low, the range was 59.43 at the high, 59.19 at the low, 59.03 at the high of the low, and then 58.8425, which was the low of the chessboard and also serving as our previous day low. Important levels that I talked about before trading: weekly fib, fair value gap, and then 4-hour support. My bullish plan off that 4-hour support was going to be, if we came down here, I was looking to get long, targeting the previous day low, right? And then the PM session range. Well, we got exactly that, but we got that off the fair value gap. So the market never came back to my 4-hour support. Instead, it tapped into the fair value gap and we got the same exact plan. The market targeted previous day low, and then it targeted the PM session range. It went from the low of the range all the way back up to the high of the range, tapping into this in wall. So I was off by a little bit, but if you use this plan, I mean, this area was the area to get long, right? If the market couldn't close below these lows, then you needed to be looking for the market to go straight back up, right? So bearish, we never got to play this bearish plan, so this is kind of irrelevant, but eventually I'm looking for price to come back up here and retest 60.5125 through 59.9925. And again, I want to get short targeting the in wall. But if it does this on Monday, it's probably going to run straight through this. So just throwing that out there. All right, so that was my pre-market plan, but like I ended this day, when you see the 5-minute candles here, I ended this day break even, right? And like I wasn't really upset, but I wasn't really ecstatic about the day. So I've been going through this weekend, Friday. Last night I spent a lot of time just going over the charts and reviewing, sequences of price, because what I'm finding myself doing this week, and again, it's nothing that I need to change about my system. It's just execution wise. What I'm finding myself doing is I'm chasing moves that have already completed themselves, right? So this morning, or Friday morning, I saw this move, right? And I'll turn settlement on so you can give it a little bit more context on why this move was important. Number one, we were at the top of my chessboard and I saw this at 7:15. Two, we were rejecting settlement price once, and this was the second rejection. I saw this move and I passed on it, right? Although it was in my area, it was part of my plan. I could have easily got short and been done for the day, right? I didn't, and this manipulation caused me to FOMO. So I put a limit order short, thinking that, oh, we're going down, right? We're going to go target this low. Like, yeah. I mean, all of that may be true, but why would it do it before the market opens? It needs to come back up and retest this level. So I put a limit order short, one micro, and then I loaded up. And honestly, hindsight being 2020, I should have just kept this trade idea on, because although I would have sit through a little drawdown, this trade would have ultimately been the right trade, which was I put one micro here. Inside of this fair value gap, I loaded a limit order for 3 micros. And then at the high of my chessboard, I loaded 3 more micros. And then up here, I loaded 3 more micros. So if I would have just left that trade on, it actually would have been the right direction, right? But I ended up getting scared and I cut the 1 micro for $40, right? And then I found myself trying to short this at the open. And, although it was a good short, I sat through this trade so long, like, I ended up losing money. I didn't lose money. I gave back money, and then I just ended up cutting my day for breakeven. I got really frustrated about 10 o'clock, and I just said, you know what? I'm done, guys, right? And then the more I thought about it, after I locked my account, the more I thought about it, I was like, well, Hobbs, like, did you trade your plan, though? Right? Like, yeah, your trades were good, but why would you be shorting here at the green box? You should just be patient enough to wait to short at the red box, or be patient enough to wait for this to be retested and just get long at the green box targeting the red box. The market was so clean on Friday, but I was so in my, sometimes I can get in this mode where I'm just like, man, screw it. I don't like the price action. I'm out of here. Reality is I'm not going to do that anymore, right? Like, yeah, I want to make sure that I have my physical activity, do my homework, all those other type of things. But sometimes when the market is like this, I just need to give it a little bit more time to develop, right? Because later, after I locked the account, there were some really good trades that ended up developing after this, right? That all I had to do was be patient and wait for my areas to hit. And I had the market dead to rights, right? So ultimately, this video is about a market review, but this is also my trading journal, right? So what you're going to hear out of me a lot of times is sometimes you'll get a market review, a nice clean review of price. And sometimes you'll just get me reflecting on the psychological aspects of trading, right? In this situation, if you turn the macros on the 5-minute time frame, what you will get, right? Let me turn on one side. What you will get is a very clean day of price action, right? We put in we had the consolidation overnight, right? Just to reiterate, we consolidated from Thursday into Friday morning, basically like almost 24 hours, like a little over 24 hours. So what do we anticipate after accumulation? Well, you should anticipate manipulation. We get manipulation down to the low of the chessboard here at about 3 a.m., right? We push back up to retest that manipulation at about 7 a.m. So now we're in bearish dealing range, which we'll talk about after this. This is a bearish dealing range. This high to this low is all bearish. We sweep that area, come back into settlement, come down again and break the structure, and come back up and manipulate up. More consolidation into manipulation is going to yield expansion, okay? Then down here, again, same thesis here. We had to identify our dealing range, right? So our dealing range was from here to here, right? In regards to the accumulation. It's important to identify your dealing range, right? In everything you do, right? Because the accumulation, noting the accumulation is going to be very important, because if you can find it, then you know what comes next, right? I don't know why this isn't changing, but anyway, if you can find it, you know what comes next. You know that after accumulation, you should expect some level of manipulation, right? If you get that level of manipulation, if you find the accumulation, well, for me, this is simple because I have a system that says, okay, we're in the chessboard low. I'm looking for longs. I've identified the accumulation. Once I have identified the accumulation, I'm looking for the manipulation down, not up. I'm looking for the manipulation down so that I can take the market long. Now, you could take this short, right? I'm not saying you can't, because it lines up with time, but the true move is going to be back to the upside, right? We manipulate down out of the manipulation, taking out all of these buyers that got in early, right? And their stops are back here. They take them out, and then they expand back to the upside. Now we get the consolidation at the upside, right? And then we get the manipulation up out of that consolidation, right? So you get your consolidation here, your dealing range is here, right? You slightly manipulate up. Again, this is S&P, so the manipulation is not going to be too crazy. And then you get the same expansion down, create a nice little gap, and then the market taps back into this level easily, right? And then starts to trade down right into the weekly fib, into the fair value gap. And then the process starts back over again, where we get the accumulation down here at the lows, right? Inside of this 5-minute candle, you're going to find a lot of accumulation, right? You get accumulation, right? You get the manipulation down from that accumulation, because it's the manipulation goes, the accumulation goes here. You get the manipulation down, and then we get the expansion up. Accumulation, manipulation, expansion up. Accumulation, manipulation, expansion up. Accumulation, manipulation right there, and then expansion up. Again, this is the S&P, so that consolidation is going to be tight, and the manipulation is going to be a little bit more slight than that of the NASDAQ. But ladies and gentlemen, ultimately, all you got to do is follow your system. If you have a system that works, and I'm talking to myself too, right? If you have a system that's proven that you know works, the worst thing you could do to yourself is start doing things like creating trades. When I got short up here, I was creating a trade. We weren't at the red box. We weren't at the green box. We weren't at the in wall. We weren't at the red box up top, right? We weren't at supply. We weren't at demand. We weren't at support. We weren't at resistance. We were in the middle, right? I have all of these levels for a reason, to keep me out of things like this. So moral of the story for this market review is trade what you know, not what you think you see, right? Trade what you know, not what you think you see. That being said, my name is T Hives. This is the market review. Thank you guys so much for tapping in, and I'll catch you on the next one, man. Peace.